All right. Hello, everybody. Welcome back to another episode of the Market Close. We got a red day. We've got a red day, and well, it went red in the middle of the day. I don't think anyone really had a reason for why it went red. We didn't get a Trump tweet. We didn't get some China stuff. Like, we didn't get some random thing headline that you could say, oh, obviously that's why the market's down. But we did get something, and it took a little bit of time to figure out what happened. And over the past couple of, well, I would say past, honestly, 45 minutes, I think I've come to a conclusion on why we're red for the day. And it looks like we have the reason, but it's hurting the entirety of the market. So let's just pull this up real quick and look at some of the damage, and then we'll get into what's going on. Robinhood down 2% on the day. Palantir down 1%. Tesla down 2%. NVIDIA somehow holding green at 180. S&P back down below 660. We were at 668 at one point. So that's down about 1%. Grabby Grab went below 570. Bought the dip at 577, bought the dip at 575, bought the dip at 570, and here we are at 568. So it is what it is. We're not going to go to Trump. Trump is not speaking about the markets. Trump is speaking about in vitro fertilization. So don't worry about what Trump is saying when he talks about some questions or he takes some Q&A from the audience, maybe in 30 minutes, then we'll switch over to him. But the announcement is about in vitro fertilization. I know you might be saying, what the hell? It's about IVF. Yes, it is about IVF. He's not making any commentary about the markets, at least not probably until Q&A. So we'll go to him when we see what Trump says. Reddit down about 1.3%. Amazon down 1%. I did buy a little bit more Amazon today as well. PayPal down 3%. Salesforce was up 7%. Now it's down 3%. Apple down 1%. Again, all your usual suspects are just taking a hit on the day. AMKR actually held up a little bit. That one's still green. Again, this one doesn't really have too much of a multiple, and TSM earnings were good, so that's why that's holding on. But TSM, which crushed earnings, that's down 2% on the day. S&P down 1%. And we don't even want to look at Bitcoin and Ethereum. My goodness, Bitcoin 107, folks. It was at 112 this morning. $5,000 candle down on Bitcoin. And then Ethereum obviously getting hit as well, 3,800. And as a result, Bitmine, which was at 55 in the morning, is back down to 51.34. So what's happening? Why is this happening? And what the hell is going on? Well, to get a little bit of context, we have to go back to March of 2023. What happened in March of 2023? Silicon Valley Bank, a regional bank in Silicon Valley, California, collapsed. Why did they collapse? The Fed raised rates at the highest rate they did in 40 years. Silicon Valley Bank took on, one could argue, some unnecessary risk because rates were low. Rates went up really fast. Silicon Valley Bank, unfortunately, had to deal with the fact that they issued loans at a way cheaper rate than what rates were currently at. And as a result, they ended up getting liquidated. And that created an issue in the broader financial sector. Now, that issue was contained pretty quickly. A lot of people thought the sky was falling when Silicon Valley Bank collapsed, and all the regional banks did get hit as a result of that. KRE, by the way, the regional banking index, is down 7% on the day. This doesn't move like that. And it's reminiscent of what happened back in March of 2023 when one bank ended up saying something that messed up the entire regional banking ecosystem. So what happened today? Zions Bank and Western Alliance, two regional banks, they came out this morning and they said they had some bad loans. They said they had some bad credit. And as a result of that, saying they have some bad loans, bad credit, and there's some nuances to it. One could say it's a charge-off. One could say it's because of a legal action. Like, it's not necessarily a structural trend, at least not yet. The most important story in the market has turned away from tech companies and their ability to show good earnings to regional banks, at least for now. Because the reason the market is getting hit today is if there is a credit crisis in the country, which is hard to believe, quite frankly, because JP Morgan and Citibank yesterday literally said that credit delinquencies are lower than expected. Bank of America, Morgan Stanley, Goldman Sachs, BlackRock, all of these guys said credit is fine. But then you got two regionals that are saying banks are not fine. And as a result, that's where we're getting some of the pain in the equity markets today. And I think regional banks now are going to be the most important story that we have to keep up with to see how this ends up playing out. We are not going to Trump. So for those saying to listen to Trump, he's talking about in vitro fertilization. We don't need to listen to Trump. He's talking about IVF. We will listen to him when he gets to Q&A, but he's not talking about anything around the markets. So don't worry about listening to Trump right now. We thought the meeting or the 3 p.m. announcement was going to be about the stock market. It's not. It's about solving the population problem that we're having right now.
Every company with a loan book In the red right now on concerns about credit quality. Regional banks are plummeting, alternative asset managers are slumping, and Jefferies is tanking once again as its name has become increasingly synonymous with the First Brand's bankruptcy. Credit concerns at Zions and Western Alliance spooking the entire sector today. Zions revealing in a filing last night that it is filing a lawsuit and taking a provision of $60 million due to what it describes as, quote, apparent misrepresentations and contractual defaults related to a borrower. Western Alliance filed its own 8K this morning, saying it doesn't need additional provisions related to its exposure to that borrower, which it had sued back in August, alleging fraud. The bank believes collateral coverage will cause it to avoid losses, but Western Alliance also had exposure to First Brands, and you can see what those stocks are doing. They're down double-digit percentages. Bank of California is another name to watch today. As analysts point out, it too has exposure to the same borrower, although its exposure is minimal and senior in the capital structure. Still, those shares down 8% right now. Even though exposure totally for each of Zion's, Western Alliance, and Bank of California stands at under 2% relative to their respective tangible common equity, the markets are on high alert about cracks in the credit markets following the bankruptcies of those two auto companies last month that sent private credit stocks roiling, which we're seeing kind of a rinse and repeat of today, Scott.
All right, Leslie, thank you.
So in a nutshell, what did she say? For those that just want to get the pure summary of it, two banks this morning, Western Alliance and Zions, reported that they have some bad credit. Is this a structural problem in the regional banking industry? I don't know. No one knows. But if you take a look at these stocks on the day, I mean, it's pretty disgusting. It is a full-on wipeout on some of these banks, and a lot of these banks are down even worse than when the screenshot was taken. And the reason I think the broader market is down is because if there is the potential of a credit risk in this country, which, again, I don't want to be too hyperbolic and say that's the case because we got a lot of bank earnings from the most important banks in the world, and they said that there's not that type of risk. But then again, maybe there is in the regional, so we're going to have to really keep an eye on it. But if there is, then yeah, I mean, people would rather sell first and investigate later versus hold on to their stocks, assuming that it's a nothing burger. I mean, that's just kind of the psychology of the market. But it doesn't necessarily seem like that is the biggest structural issue. That way, we're not announcing a war with China. Two banks said they had some bad loans. And so I don't know. I feel like it's a little bit overdone. I mean, back in April, we were in extreme fear. We have not been in extreme fear since April. In April, the S&P 500 was at 5,000. And we were at extreme fear. We are 3% away from all-time highs, and now we're at extreme fear. I don't know if that makes any sense, but nonetheless, the fear and greed index is telling you it's a buy the dip. But once again, it feels a little bit more like algos are taking advantage of this. Algos are selling. You automatically get people getting scared of a bank run or a credit crisis. They start selling, and so it piles on. Stop losses get hit, margin calls, etc. It's not as bad as it was on Friday with that 3% drawdown, but S&P down 0.65% on the day is reasonable, especially given the recovery from 647 on the S&P. Obviously, just taking down a lot of stocks with you. And that's why I bought some of my favorite companies. I bought more Grab. I mean, look, if you're going to give it to me below 580, I'm going to buy that. If you're going to give me Amazon below 250, I'm going to buy that, especially if I think the regional banking crisis is not really a crisis. It's being perceived as a crisis. And any other regional banks that come out over the next few weeks and they announce their earnings and they don't have credit issues, I think that reverses it. And as a result, I don't think it would be the biggest deal in the world. But nonetheless, we're going to have to see how this plays out. Now, the VIX is spiking on this. As a result, VIX, you can see right there, up about 20% on the day, 2440 on the VIX. This is the second time we've had a VIX spike of over 20% in the past week. Once was on Friday and once was on today because of the regional banks today. Friday was the Trump-China tweet. And as a result, you're having some pain. Now, if you are in a high beta stock like rare earth, you are down badly today. TMQ down 16%, CRML down 14%. Lithium Americas down 22%, MP down 6%, USAR down 15% on the day. If you are in a Bitcoin miner turned data center, you're getting wrecked. IREN down 9%, Cypher down 10%, CleanSpark down 14%, Wolf down 10%, Hive down 14%, Bitfarms down almost 20%, Marathon down 11%, Riot down 11%, Galaxy down 5%. Also, if you're in some nuclear stocks today, like the Oklos of the world, you are getting hit along with the quantum stocks of the world. D-Wave right there, down about 10%. Is this a structural problem with all these high beta stocks and the momentum is gone and they are ready to really, fall to a floor? I don't know. But on a day like this, momentum is definitely not on their side. And the question simply becomes, are there enough people to come in and buy the dip? Or is this going to be an issue that lasts for a longer time? We're going to find out. But that's why we're in pain, folks. That is why we're in pain. It's the regionals. I really like, and we should have seen this in the morning, but I just didn't pay attention to the Zion's earnings because we had so many other things going on. And then by about 1 p.m. today, markets started taking a hit. And like, when you look into it, you're like, oh, the regionals didn't report the best quality of credit. And as a result, that's why we're taking some pain. For those that wanted to look at Trump, this is a 20-second clip of what he's going to be talking about for the next hour.
We're here today to announce a historic victory for American women, mothers, and families. With the actions I will outline this afternoon will dramatically slash the cost of IVF and the treatment and many of the most common fertility drugs for countless millions of Americans. Prices are going way down, way down.
So it's about IVF. It's not about the banks yet. We will go to Trump if he does Q&A, and we'll see if he talks about China, the banks, or anything else. But right now it's about IVF. And, actually, when it was announced by like the New York Times and Bloomberg that, hey, Trump's going to be talking about IVF and that's it, markets actually went up. If anyone noticed, markets started going up because everyone was like, oh, cool, it's about IVF. It's not really about, he's not like going to make an Oval Office address about the issues going on with China that would spook out the markets. It's about IVF. No one cares. And then an hour later, it's like, wait a second, these regionals are not doing that good. And this is why it's so fun covering the markets, because one thing or another is going to try to put pieces to the puzzle of the story of understanding every day what is happening. And today you've got regional banks that are creating the issue. Put in the chat if you bought the dip, if you took some profits, let me know what you did. Did you get Robinhood Digest? Yes, I got Robinhood Digest finally. That is the AI suite of products from Robinhood explaining why stocks are up or down on individual tickers. I literally got it 10 minutes ago, and it's super smooth, dude. It is super smooth. So I'm loving it. I've been playing around with it for a couple minutes, but I think they rolled it out to a lot more people. So people have that. Kris will be on in about 10 minutes. We'll be talking a lot about macro, what's going on in the regional banks. Kris was actually one of the first people who helped me understand regional banks back in March of 2023 when we both bought call debit spreads on Truist after it fell to an 11-year low. So I'm sure he has some opinions on that. Also, in the midst of these regional banks getting hit, the 10-year. We are finally below 4%, which is actually pretty bullish. And at the same time, as we are above 4%, gold has hit a new all-time high at 4,300, which is kind of crazy. So you got gold at 4,300. I mean, gold's been going up like 3% every day. Like that's not supposed to happen with gold. But then you also have the 10-year coming down, which is good because, we need the 10-year to come down. It's really important for the 10-year to bring down the cost of borrowing in this country. It's just, how do you make a narrative out of it that makes sense? I don't really know. And we're going to have to get a little bit more data to see how this plays out. On top of that, we have IBKR earnings after the bell. I'll put a poll right here in the chat on, do you think we're going to get on Schwab had a great earnings, so IBKR will probably have a good earnings. Just going to be a question of if the stock also reacts on those earnings. All right, folks, here we go. Thank you all for being here. Another day, another time to analyze what goes on in the global capital equity markets. And today, the story is about regional banks. It is Thursday, October 16th, 4 p.m. The stock market is officially closed. All right, we're done for the day. We are done for the day. I see a lot of people saying I bought IBKR, I bought some Hood, I bought some Webull, I bought BM&R, bought Grab, bought SoFi. SoFi got all the way down to 26.62. I see a couple people saying I sold gold. Other people saying I sold some of my VIX calls. I see Lemonade, I see BM&R, I see Rocket Lab. I mean, everything was down round about at least 2 to 3% today. On the higher side, 5 to 7%. So I see a decent chunk of people that took advantage of those dips, but it looks like more people bought. NVIDIA closed the day 1.13%. NVIDIA actually holding on to its green. Tesla down below 430. That's down about 1.4%. Pound share down 0.5%. Robinhood almost lost 130. Got pretty damn close. If Bitcoin takes another wick down, I mean, Robinhood's probably going to lose 130. That's just the honest truth about it. And I get more excited in the 120. So let's see what happens. But Robinhood right here, 130, 138. That's down about 2%. AMD down 2% of the day. SoFi. Now, look, let me address this real quick. A lot of people are saying, so is this bearish SoFi because the regional banks are having some credit issues? My perspective is hell no, because SoFi, A, is not a regional bank. B, SoFi's credit writing is phenomenal. I mean, if you've just done any research on their credit underwriting, it is not I mean, they do not take the process of credit underwriting lightly. I mean, they really focus hard on making sure they give out good loans. So I don't think this is a sell SoFi news. Will the algo sell SoFi? Yeah, because it's a bank. But I think that should create a good opportunity. If we get a stupid dip on SoFi, I will be a buyer as well, because I just don't think that would be justified. Google right here, 252. Google actually closing above 250 was bullish. Grab right there, 576. Reddit down 1%. Amazon down 0.5%. Meta down 1%. Salesforce still held 4% of the day. PayPal down 3%. And then Elf up about 1.3% of the day. AppLovin, that one held on to the 600. Circle down 5%. Anything Bitcoin related kind of took a hit. Coinbase right there at 330. That was down 2%. MicroStrategy, are we below 300? We are at, wow, 284 on MicroStrategy. Ugly, but that's what you got for MSTR. Okay, IBKR, I think the earnings are out. Let's pull that up. We are going to pull up Webull so we can see the after hours move on this. Okay, Webull is being stupid, so we'll go back to Legend. IBKR, I think we got a pump. Do we have a pump? Do we have a pump? We do have a pump. We do have a pump. It's not up 2% after hours. It's more up 4%, but we are up. It looks like we got a double beat. Looks like we got a double beat of 3% after hours on IBKR. Let me see if I can get the exact earnings in a second. And we'll see. What did you guys say on the chat? 60% of you said pump. 60% of you said pump for IBKR. Also, CSX is reporting earnings today after hours. Wow, you got a double beat. 6% beat across the board. 57 cents versus 54. That's an EPS beat. EPS is up 40% year over year. Revenue's up 21% year over year. 1.61 billion versus 1.52 billion for IBKR. I mean, you can't be too upset about that. Schwab also had a phenomenal earnings today. By the way, Schwab is getting ready to start unveiling more crypto products based on what they talked about today. But IBKR not doing the worst, and that one continues to go. Oh, no, now it's losing some of it. It was green. Is it losing it? It's still up 1% after hours, but you can see that red candle right there from 71 all the way back down to 60. I mean, look, a 1 or 2% move isn't even that volatile in the first place, but it is losing a bit of its momentum. Austin says net interest income increased 21% to 967 million on stronger securities lending activity and higher average customer margin loans and customer credit balance. Let's see if IBKR actually put out the entire letter on their website. Do we have it? No, we don't have it yet. Okay, so once I get it, we'll get through all of it. Oh, no, I got it. I should have it. This is it. Yep, here we go. All right, commission revenue 23% to 537 million. Net interest income 967 million. Other fees down 66 million. General admin expenses down 60%. That's actually really good. They're taking their expenses down pretty dramatically. Customer accounts 32% increase. Equity 40% increase. DARTs, daily average revenue trades, that's up 34%. That's incredible. 3.6 million trades a day. Customer margin loans 39%. IBKR is loaning out 77 billion to customers on margin, 40% year over year. I mean, that's similar to Robinhood and I think Schwab to an extent. Obviously that means people are risk on as they're borrowing money to buy equities, but you can see those margin loans are up, and then overall revenue is up 21% year over year. So that's what we got with IBKR. Now, all the IBKR back to going green. All of the fintechs today took a little bit of a hit. Unfortunately, because of the regional bank stuff. So Klarna right here down about 5.5%. Square, XYZ, that one took a hit. Affirm took a hit. Square right there down about 2.4%. Affirm was down about 3%, 5.4% on Affirm. So this regional bank issue, again, I don't know how big of a deal it's going to be. Look at Truist down 5% on the day. The overall index took a nasty hit. KRE right there down almost 7%. Zions, which was one of the main culprits, that one down 13% on the day. And then Western Alliance Bank, that one down 8%. We needed to get a good earnings for Q3. And so far we've got a good earnings. It's just two of these regional banks have not been the best on earnings. And it seems like that's what's creating some pain as markets are very close to all-time highs. CSX, that is green after hours as well. It looks like we've got those earnings. Adjusted EPS beat of 44 cents. No, miss. And then revenue is a beat. Okay, so it looks like they missed on EPS. They beat on revenue. I don't even know what CSX is, to be honest. Oh, no, they beat on the top and the bottom. Okay, so they beat by 5% on EPS. They beat on revenue. CSX, what is this company? American holding company focused on rail transportation and real estate in North America. Market cap of 67 billion. Dividend of 1.4%. Year to date, this stock is up about 11.3%. So definitely not a small company, but you do have a beat on the top and the bottom for these guys. And it looks like the stock is reacting favorably. Let's pull up some coverage on this. And we will keep going from there. So let's pull this up. And then we got some updates on what Trump is saying. We'll see what we've got.
Frank Holland has the numbers. Frank?
Hey, John, as you mentioned, stocks moving higher right now after revenues that were in line, but a beat on EPS. The estimate was 42 cents a share. It came out at 44 cents a share. We're looking deeper in the report, though. When we look at the company's merchandise segment, that's where they generate almost 2/3 of revenue. The revenues there were essentially flat. The company had promised volume growth throughout the year. We actually saw the volume in the merchandise segment flat again, but overall volumes for the company were down 2%. That's going to be something very important for the new CEO to deal with in this company. He actually put out a statement saying that the company saw some strength in its intermodal volume. That was something that we actually talked about just a short time ago on Closing Bell. The fact that the company expected to see strength in intermodal following its partnership with BNSF, a West Coast rail, also expected to get some volumes from J.B. Hunt. That's also moving much higher right now. But again, shares of CSX up about 2.5% after revenues that were in line and a beat on EPS. The strength really came from its container shipping business.
All right, so CSX and IBKR, I mean, they did their thing in terms of delivering us good earnings. It's just these freaking regional banks. They did not have the best earnings today. And as a result, you're not getting some pain. TeraWulf announces prices of $3.2 billion of senior secured notes and proceeds. I don't think that's new dilution, right? That's older dilution. TeraWulf still is down on the day. Again, all the Bitcoin miners got hit pretty bad today. TeraWulf up a little bit after hours, but not seeing too much of an impact from that news. Trump is not talking right now. There's some other lady in the IVF conference talking. Trump probably will get to Q&A soon, but there's someone else right now talking about IVF. I really didn't think the announcement today was going to be about IVF. I thought it was going to have to do something with China, but it ended up being about fertility and the population crisis, which, look, it's a legit concern. It's just, you know, when regionals shit the bed, everyone's a little worried about something else. But UNH right there also down about 1.6% on the day. IBKR and Hood both have the similar margin book, but their IBKR is $77 billion, Hood is $10 billion. Yeah, Hood is, I think, now almost $12 billion. So IBKR vast, a quintupling of Hood's margin book, and they make a lot more money off of it. But the point is, all the brokerages are giving out lots of margin because consumers are willing to pay for margin. And as rates come down, the cost of borrowing capital gets cheaper. So people are willing to borrow more. It's just when the market crashes, if the market crashes, and you can't pay back your margin loan, that's when things can get ugly. So that is the risk that is there right now. Now, CoreWeave was up on the day. If we get to some other headlines, we'll see what Trump's talking about in a bit. CoreWeave was up 1.4% of the day. The reason CoreWeave was up is because XAI is going to be leasing a $20 billion package to own NVIDIA GPUs. This was actually announced a couple of days ago, and it was kind of confirmed today. CoreWeave is estimated to be one of the core companies that's going to be helping XAI lease a bunch of those GPUs, potentially also in Texas. And as a result, CoreWeave ended up going green on the day. Nebius also got a boost right when that announcement came out. Nebius could not end red on the day, got all the way up to 130, closed at 123. But all the data center companies outside of the Bitcoin miners got a bit of a boost once that announcement did come out. So that's what we've got. Opendoor, how did that do on the day? Opendoor, 708. The meme stock ETF, this one took a hit, down 8% on the day, back under $10. In terms of the most traded options in the stock market today, NVIDIA and Tesla were number 1 and 2. Then you had IBIT, AMD, Amazon, Palantir, Apple, MicroStrategy, Rigetti, a lot of the quantum stocks down on the day, SoFi, Google, Intel, Micron, Oracle, Marathon, CoreWeave, Beyond Meat, TSM, Meta, and Opendoor. I'm surprised none of the regional banks actually made it into the top 20. So maybe the concerns weren't enough to get the options market super excited on buying puts on regional banks. But nonetheless, that is now a new concern that a lot of us are going to have to look into. And that's what you got. Did you buy more Grab? Yes, I bought more Grab today. Bought a little bit more Amazon. I mean, look, I didn't buy a crazy amount of the dip today. I nibbled here and there. I don't know if this regional banking thing is the biggest issue in the world. Realistically, an hour ago is when it became more apparent to me that this was the reason the market was actually upset. And we're just going to have to see, how long this ends up playing out in regards to regional banks. Now, the one final thing I want to say on regional banks, and then we'll get Kris onto the show for Macro Thursdays, is that the government shutdown might be doing something to the regional banks. By the way, real quick before that, Perplexity launched the new language feature today. That's why Duolingo was down 5%. All of these tech companies, they're going after language for some reason. Language is the biggest thing they want to cure with AI. And I think Duolingo is just like, dude, do all of you guys have to focus on what we focus on? Like, can you just like let us chill out? But that was Duolingo. Okay, so one of the issues with regional banks in terms of the shutdown right here is from this idea. A lot of regional banks rely on short-term liquidity, aka cash on hand, to cover daily operations. Weekly government payments temporarily boost the cash on hand for these regional banks, aka their float. But when a shutdown stops these payments, banks must sell assets to stay liquid. Right now, large treasury settlements are draining cash and banks are borrowing heavily from the Fed to cover gaps. That selling pressure ripples through into the broader market. This is one theory. This doesn't have to be the only theory. Especially because the shutdown has only been happening for 2 weeks. And, these earnings that tanked the market today from these regional banks are from last quarter. So they really don't have anything to do with what's happening right now. But one argument could be the perception of the government shutdown is having a short-term liquidity impact on some of these regional banks. And that, from a perceptual perspective, could be the reason why the market's losing some of its momentum. Having said that, we got a lot to talk about today in regards to the 10-year, inflation, interest rates, regional banks. Ladies and gentlemen, let's get into Macro Thursday. Kris Patel, what's up?
Happy sub 4% on the 10-year day. Finally, after I think almost 9 months, we're below 4% on the 10-year, which is always nice.
It looks like we might sustain it too, eventually.
I hope so, man. I hope so. There's a lot of people that need to refinance, a lot of businesses that need to start working on planning for their debt issuances for next year. So by getting the longer term rates down, this is a big positive for a lot of businesses, and even people like average people that need to refinance their homes lower because they bought, during 22, 23, or 24 and 25, and they're sitting on 7. They got a lot of people got sold on this stupid thing, which is marry the house and date the rate or some shit like that. You ever heard of that before?
Yeah. Yep.
You're muted. I can't hear you. I don't know if it's just me.
No, it's just you. It's just you.
No, it's probably me. One second.
We got to make an intro for Macro Thursdays. That's correct. We do got to make an intro for that. Dude, someone called him Indian Steve.
Hey.
You can hear me now? No, he still can't hear me. We have Asian Steve, regular Steve, and Indian Steve.
Yeah, technically it's Indian Steve, man. I was on here before Steve was.
That's true. Oh, you can hear me now, right?
There we go. Sorry, my headphones weren't connected.
Oh, okay, can you hear me?
Yeah, I can hear you. Okay.
Okay, Kris, I would zoom out a little bit because it's a little bit too zoomed in on you.
Yeah.
No, that's too close. Okay, perfect.
There we go.
Okay, so we got a lot to talk about with the 10-year. Let's start off with this, dude, because you know a lot about regional banks, and obviously you've seen what has happened over the past 2 hours with these regional banks. Do you think, based on what Zions and Western Alliance said, we might have a structural problem with credit based on these regional banks?
I don't think it's nearly as systemic as people are making it out to be. Let me briefly give some people a little bit of background on regional banks versus like your traditional JP Morgans and Wells Fargos. Based on how big you are as a bank, there's certain restrictions that were placed that were put on you after the Great Financial Crisis, where the bigger you were, the more likely it is that you had to retain more capital on your balance sheet, and you could not lend that out. Now, because of that, there are other banks and non-banks that kind of filled the gap, right? So basically, they came in and said, "Look, we know the big banks can't lend you money, but maybe we can. We'll help you out." Right. And so a lot of regional banks, if you wanted, like, let's say a car loan or a home loan or whatever, you could go to your local regional bank, your credit unions, and basically get the loans that you needed, because the big banks wouldn't necessarily have that money to lend to you, or the rates that they were trying to give you were not as good. So a lot of what we're seeing right now is just some tailwinds from the fallout with Tricolor and some of these other ABS originators. And that's a big problem. And I think I mentioned this the last time we were on here about auto loans, how they were being fraudulently issued. And also like this whole business of subprime borrowers getting loans for used cars at crazy high rates. I was actually just at lunch today with my accountant, and he was telling me about certain transactions that he had seen with some of those clients, where a lot of, like, let's say you're an immigrant, like an illegal, and you wanted to buy a car, right? Or a truck, whatever. You can't go to the traditional bank and say, hey, let me borrow $15,000, $20,000 to buy this used truck. So they were going to these quote unquote weird lenders that essentially charged crazy and high interest rates, like 10, 15%. But essentially they would give you that loan, right? The challenge is, with all the deportations and all this happening, can't exactly go after someone that just got deported, right? So you're starting to see things like that kind of creep up a little bit into this thing. So there's a lot of things that are happening. There's also a lot of fallout from commercial real estate, where a lot of these regional banks, they held debt from commercial real estate,
Yeah.
and instead of calling those loans in when they matured, they essentially just pretended like they didn't default, and they just extended the maturity. Well, that only works for so long before people start asking questions, and people start doing something called mark to market, where if let's say there's a property that, they needed $500 million in 2017, and that property is now only worth 250 million, but on your books you're saying that the asset is actually still worth 500 million because you didn't re-rate it down. That means that when you do actually get it re-rated, that means that now you have to eat that cost. So a lot of people are worried, like, hey, wait a second, is my bank one of the ones that has issued all these bad loans or under collateralized? And so that's where a lot of people are kind of scared. And a lot of this is because, believe it or not, Jamie Dimon kind of said, I don't know if you saw the quote from Jamie Dimon.
Oh yeah, he talked about cockroaches basically, and said
Yeah.
that. Yeah, the exact quote right here is, Michael, you should assume that whenever something happens, we scour all processes, all procedures, all underwriting, all everything, and we think we're okay and other stuff. But my antenna goes up when things like that happen. And I probably shouldn't say this, but when you see one cockroach, there are probably more. And so everyone should be forewarned on this one. Do you think he's making a legitimate point that there are cockroaches in the credit sector of the country? I mean, you talked about these auto loans and what's going on with illegal immigrants. Could that, like, on a percentage basis, I know it's kind of a gut reaction today, but what, 10%, 20% chance that it's a real issue in the country right now?
It's too small to be a major issue. This is not 2008. 2008, like, you're talking about the mortgage market, right? And underwriting has gotten a lot better since 2008. So it's not necessarily as impactful as 2008, but there's definitely a lot of banks that are out there that are not exactly in the greatest of shapes. I'm telling you, the biggest challenge that you have is businesses being marked to market. Like, there's a lot of non-traditional bank lenders that have come in and provided capital, and they don't want to declare what the real value of these underlying businesses are. And if that's the case, then the loans that they've issued are not good. So, this is one of those times where confidence is being shaken in the financial sector. And the thing is, do I think it's a systemic issue? I don't think so. I think the regional banks have had plenty of time to kind of right size some of their balance sheets. So this is the time where you want to kind of look at the regional banks and look at the ones that are being sold off, and look at the ones that are the strongest, that have the best credit profiles. Unfortunately, this is not public information that we can reach into, like SEC filings, and look for like bad credit events. Like, you can't say, okay, yeah, they issued loans to this specific company, and or they have loans on the balance sheet that has this kind of exposure. So it's really hard to figure that out. So you have to just rely on, hey, what is the management of this business like? How credible are they? what kind of processes do they have in place to make sure that they haven't been issuing a lot of fraudulent fraud, and it doesn't necessarily have to be fraud, by the way. It could also just be making bad loans that they don't want to recognize.
Yeah. And if anything of like when this happened in 2023, the big banks got bigger because they ended up acquiring the regionals that failed. And that kind of stopped the contagion from becoming a contagion. If it does, and Silicon Valley Bank collapsed. Like that was 1,000 times worse than Zion saying they had a $50 million charge off. One of those was because of a legal injunction. So it might not even fully be just because of bad credit. But to your point, when the markets get scared about credit issues, everything gets sold off.
Well, Silicon Valley Bank was more structural than actual like bad credit. Basically, what they did was they had all these depositors, and what they did was they bought treasuries with them, and the treasuries were yielding barely anything. And at the same time, they had a bank run. And so now you have this really illiquid, well, technically it's super liquid, but the further out treasuries that they had were illiquid, and they would have had to take a giant write-off. So, Silicon Valley Bank, First Republic, those are a little bit different. This time around, people are just worried, and especially because some of these originators have gone out of business, like Tricolor, this other one that they have, I forgot the names, but they're not that big. So it's not something that I would be like, oh my God, this is a systemic issue with massive rampant fraud all over the place. I will say this though, there could be a lot more used cars on the market.
Kris, I'm going to stop you real quick right there. Trump's taking questions. Let's see if we get any questions of value, and then we'll go back.
Please.
Mr. President, you posted earlier today.
Yeah, please.
Mr. President, this is a major campaign promise that you made. It was a big hot topic towards the end of the election. You're delivering on that again. I actually had a question for Secretary Kennedy or Dr. Heidi. Dr. Heidi, you said something that I thought was really important. You talked about how this coverage option, this benefit option, gives companies the maximum flexibility to design benefits consistent to their values. I was wondering if either you or the president could expand on that and talk about why that's an important thing to understand about this program.
Yes. Thank you. It's a great question. We think that employers are best situated to know what them and their employees want to contribute to in relation to their benefits. So employers are going to be able to decide to see certain types of doctors, and they can work with providers that are identifying the highest quality fertility providers. And so it puts them in the driver's seat. And our view is that we want employers to be the ones that can make those decisions, not the government. Thank you.
That's a good answer.
Yeah, it was.
That's a very good answer. Yeah, please, go ahead.
Mr. President, previously you did not seem to be bothered regarding Hamas cracking down on what you called.
All right, so we're not getting actual questions about China or anything economical. So we'll get some quotes. I will pull up the quotes whenever we get them in real time for whatever Trump says, but those questions are more on the other political issues. Okay, so let's talk about the 10-year then. Regional banks, maybe not that big of an issue. The 10-year, this is something you're really focused on, Kris. Why is the 10-year going below 4 such a big deal for markets right now? You're muted.
It's a combination of things. One, it's a projection from the bond market, and the bond market is much, much bigger than the equity market for people wondering. When the bond market starts to buy a lot more bonds, there's two reasons why. Either they're expecting inflation to be lower on a forward basis. So when the long bond starts to go south, people are not going to say like, yeah, I'm willing to accept a 4% interest rate if they can get 5% from the Treasury, right? Unless they expect that within the next 2 years, 3 years, the interest rates on the Fed is going to be down to 2%, in which case now they're going to be like, they're not going to be able to get the same return. So what we're seeing right now is, number one, people are expecting less inflation, more cuts, right? So that's a simple reason why, one, it's going down. But the other reason why is because if there's any fear in the equity market, people are going to run to safety. Yeah. And treasuries are pretty good yielders right now in terms of safety. You're getting right now almost 4% return, pretty safe without having to do anything. So this is the one thing that weirds me out a little bit in seeing gold run up But at the same time, treasuries are coming down. I mean, treasury yields are coming down. Technically,
what does that mean? Why is gold going up? Why are people buying gold and treasuries at the same time? Because that usually goes the opposite, right?
you would think so, right? Gold going up means that people are expecting the debasement of the dollar. So that's the trade that people have been kind of making. But then if you look at Bitcoin is down today, right? So what is it? Is Bitcoin not an inflation hedge all of a sudden? It's not a inflation.
Has it ever been an inflation hedge, or has it always been a way for people to speculate? I mean,
that's
never acted good during inflation.
That's the idea that it's supposed to be, right? So on one hand, you're starting to, technically in the longer run, Bitcoin has outperformed the dollar by miles.
Yeah.
It's just gold has been recently doing it. And I suspect the reason is more structural than actual fundamentals, which is people are de-dollarizing, right? Like central banks around the world are just, they're worried right now, like what is the dollar going to be worth? So a lot of central banks are probably buying buying gold right now. So like China right now is probably buying the Chinese central bank is probably buying a ton of gold. And then there's also like, I don't know if you saw the post by Chicken Genius, there's like lines of people buying gold all of a sudden. So some of it's like just mania, right?
Yeah.
So I think that could also be another thing where things can get a little bit speculative, in which case people are just dumping cash into gold. So
okay, so people are buying gold as the inflation hedge, but they're also buying the 10-year because they think inflation's coming down and they want to lock in a good price. Like structurally, does that end up boding well for equities? I guess is the broader question.
Well, I mean, the one thing that the treasuries have that gold doesn't have is liquidity. Like, what are you going to do? Like all these people standing in line, what are you going to do? Buy a bar of gold and store it at home?
Yeah.
Is that like, and then how do you cash out? Like, how do you sell it? So maybe consumers and central banks can, do their shenanigans with gold, but most businesses, they need liquidity and they need liquidity fast. So they're not going to be out there buying gold like this, or even gold futures for the most part. They'll probably just stick to treasuries and get a yield off of it. So, I think there's room enough. The market's big.
Okay, so then the question becomes on the equity markets, did you buy the dip today?
One thing real quick. Someone said chicken is selling, not buying. Yes, Chicken Genius posted that those people standing in line are exit liquidity, basically. So everyone's been buying gold. Yeah, everyone's been buying gold. Now silver is making a run for it. It's and if you look at the RSI on gold right now, it's in like the 90s. It's crazy. It's like gold is one of the most crowded trades right now. So usually if you want to be a contrarian, you go the opposite direction of everyone. When everyone else is standing in line, you figure out, okay, where can we go from this? And everyone seems to be bulled up on gold right now. So I don't know. I don't know if I'd be in gold.
Are you buying gold at all or no?
No. I'm the traditional like buy yield guy. Like I like buying businesses that grow over time and grow yields over time, not just, hey, the next guy is going to buy my shiny rock for more than I bought my shiny rock for.
Yeah.
Right.
Yeah.
The only difference is there's consensus around the world that the rocks that are called gold are valuable. So everything runs on consensus. If everyone thinks that a Mickey Mantle card is worth $1 million, then it's worth $1 million. If no one thinks it's worth $1 million, then it's just a piece of paper with some guy on the card.
Well, the market cap today officially is 30 trillion for gold. Okay, so equities next 6 months. What are you thinking? We had rare earths that got crushed today. Quantum got crushed today. Nuclear stocks got crushed today. Bitcoin miners got crushed today. Is this a flushing out of froth, or is this a buy the dip on some of these high flyers?
I think some of it is just plain fear that's kind of like making its way into the market. And not to mention, look at these companies, man. They've had massive run-ups up till now. So some of it is just profit taking. Some of it's fear of overvaluation. Some of it is just, hey, the technology is probably BS. And so, people have made substantial gains. They're going to want to take some profit, right? So I shorted qubits today. I did it via QBTZ, which was a good move in the morning time. So
dude, that was a great move in the morning. You should be up like 20% or something on that. So.
10, because I didn't get it fast enough. Yeah.
So Okay, so then the question then becomes, if you think people are just taking profits right here, is there any concern for the high flyers to end out Q4? Or do you think they consolidate even if they go down another 10%, but they still hold the majority of their gains?
I'm not too sure about, like, you'd have to pick each one individually. Like with regards to quantum, I'm not like in either direction, right? I think the technology is probably legitimate, but the use cases are like years away, like what's his name, Scarelli saying. So I agree with that. But that doesn't mean that the market isn't willing to speculate. When it comes to the AI data centers, there's actual customers that are coming out building things. So that's a real tangible business. I don't think that there's a real business with quantum. So you have to be very selective on which one do you think that's actually real and which one is not real. And it's not to say that quantum, the technology, is not real. It's just, there's a lot of things out there that are real technologies, but they're just not monetizable because the use cases are either so limited or not worth it. Like another thing is like same thing with the what is it called, the rare earth minerals. While rare earth minerals are very important for the manufacturing process for high technology, do you know what the total worldwide market was for rare earth minerals?
No.
It was like 19 billion last year.
Really?
Yeah, it wasn't like
you would think it's like hundreds of, you muted yourself. You would think it's like hundreds of billions based on how much we've been talking about it, right?
Yeah, no, they're critical, like in terms of manufacturing, but it's all over the place. Total market size. So when you look at the total market size, it's here it is. 1 second. Let me just pull it up real quick.
Sashi, thanks for the super chat. He says, Kris, do you expect gold to come down in the next 4 months? I have to buy nonetheless. Should I wait or should I just buy now as it might never come down? Chris can answer that, but Kris is not buying gold based on what he just said.
I don't know, man. Gold is there's no fundamentals that could tell you like where to go on gold. So I don't know. I couldn't tell you.
I would say in general, buying something that's up 70% on the year, like in 10 years, maybe it works out. But if you're doing it as a short term, whatever, you're buying something that's run up a lot, which is hard.
Yeah. So if you look at the market, like market for rare earths, it's not big. Like I said, they're very important. Like the total market size for rare earth estimate is about 12 to 12.75 billion.
Yeah.
And it could be 37 billion by 2033. So 3x from here. It's like, okay, not exactly like.
Do you think these got bid up for no reason then? Or because you said they're important, which they are.
Mm-hmm.
So like, would you even think of buying the dip on these, or like no, because even though they're important, the market application of them is not enough to justify the run up?
Yeah, I think most of these projects are going to require government support just to break even. And not to mention the Chinese have a way of kind of flooding the market, and so it's almost like this thing is strategically important to have, but it's not necessarily the greatest business. You can't really build a great business around it, because the amount of people that need it is a lot more limited than people think. This is not one of those things like steel or aluminum or something like, or copper, where it's in almost everything. This is very specific use cases and very small amounts. So yes, they're critical, but they're not like, it's just not a business that you want to, it's not a growth business, unless you're very, very early into like MP materials or stuff like that, then yeah, you could be in it, I suppose.
Are you at all concerned about CapEx? We've seen these deals with OpenAI and AMD, OpenAI and Oracle, OpenAI and Broadcom, OpenAI and NVIDIA. Anthropic said they're going to do $26 billion of revenue next year. Like, are you feeling any uneasiness around the state of the AI CapEx trade, or you think it's good to go?
As of right now, no. I think there's enough data out there that says demand is outpacing supply. So it's not something that I'm overly concerned about. Whenever we see like companies actually starting to pull back on CapEx plans, then there's something that we have to, take into account. But as of right now, every CEO is coming out saying, listen, we've got more demand than we have supply.
Yeah.
And you just got to take them for their word, right? I mean, I can't I can't deny that. So
Novo's down 5%, folks. We got a Trump quote. He says, "I think the fat loss drugs will be a lot lower in price." Hims is also down after hours. Let's go back to Trump and see what he's saying.
Because it was statute. It couldn't have been earlier. I said, boy, this falls into the next administration. I better win. And all of a sudden, I watched this Biden taking credit for something that I did. And on other things, too. We had a lot of things kick in. So the nice part about this is at the beginning of our administration. So I think we're going to see.
John Bolton was just indicted by a grand jury in Maryland. Do you have a reaction to that? I did.
Front of the line, Doug, we announced.
That's great. Why didn't I have him speak? He was so could have saved a lot of time. Thanks, Marty. I'm not surprised. Yeah, please.
Yes, thank you, Chris. So Senate Majority Leader John Thune today said he'd like to proceed with the bill which would put sanctions on Russia. What's your thought on that?
Well, we're going to see. He doesn't know about the call yet. I'm going to speak to him later. And it was subject to what I wanted to do. And so we'll see what happens. We may have, this may be such a productive call that we're going to end up, we want to get peace. We want to stop the killing. 7,000 people a week. Can you believe it? We want to stop the killing. So I'm going to speak to him and the speaker, Mike Johnson. I'll speak to them a little bit later and I'll tell them about this and we'll make the right determination. I'm not against anything. I'm just saying it may not be perfect timing. It could happen in a week or two. But it's at my option, as you know.
Right, but did President Putin try to dissuade you from selling Tomahawk missiles?
Well, of course. What do you think he's going to say? Please sell Tomahawks?
No, but did he give him
Is he going to say, please sell those Tomahawks? I really appreciate it. I did actually say, would you mind if I gave a couple of thousand Tomahawks to your opposition? I did say that to him. I said it just that way. He didn't like the idea. He really didn't like the idea. No, I said it that way. You have to be a little bit lighthearted sometimes, but no, he doesn't want Tomahawk. Tomahawk is a vicious weapon. It's a vicious, offensive, incredibly destructive weapon. Nobody wants Tomahawk shot at him.
Typically ask you not to provide Tomahawks?
So, wouldn't anybody? I mean, it's been in the news. Who wouldn't do that? CNN. Who wouldn't do that? You know, do you think he's going to say, I'd love to have Tomahawk sent my way? I don't think so. Maria, we have one of the great stars of television here, and she's an incredible person. And she's just an amazing woman who, she got it all right. She got the Russia hoax right. She got everything. Would you have a question?
Yes, Mr. President. I would ask you why this was so important to you, IVF, and why was autism?
For baby boys, it's 1 in 12. I heard 1 in 10, Bobby. I heard another one, different lists. But when you think of that, it's not even sustainable, but there's something artificial. When that happens, that's not like a natural. And then you have certain groups of people that literally don't have autism, and they're not taking some of the things that we're taking. So we're working very hard. And on IVF, it's just that I have friends, including Katie, that called me, and they told me the importance of it. I wasn't that familiar with it. Now I think I've sort of become the father ever since I heard. There was a bad decision in Alabama where a judge wanted all clinics to be immediately closed, right? And Katie called up and you said you were pretty strongly attacked by your friends that you didn't even know were involved with IVF, right?
You had people that had grandkids, people who'd gone through IVF themselves telling their story and saying there are people that cope out there.
Tell what you did when you heard from your friends. You said this was not, they almost became violent. Right?
Yeah, I told him, I said, Mr. President, we need you. We need your voice in this conversation. We need the directive. We need the strong support because there are millions of people out there, moms and dads, wanting to bring life into the world. And you had people, the chilling effect that occurred across Alabama, there were people that were in the middle of that process that had been praying to have a child, and that was halted. And so the reality of that was very stark in our state. And so I was able to tell the president some of the stories of people, friends and grandparents and relatives that told me what they had experienced against, and also, what they were fearful of in the future. And the president very quickly acted, spoke with a strong voice, and really led the way. Obviously, we saw Democrats continue to fearmonger for the remainder of the year, trying to use it as an election issue when actually IVF is legal and accessible in all 50 states. And President Trump very clearly said where he was on this, and he said, I'm going to make sure that this is more accessible and that it is more affordable for families coast to coast. That's exactly what he did, but it's that real life, those real life stories, sir, that he responded to. And that's what people don't know about him. He cares. And when you
Okay. All right. So I guess the main comment we got is Trump's comment on Russia and that the weight loss drugs will be coming down in price. Kris, geopolitical instability, do you think it's a concern for Q4? Or do you think we're getting to some level of peace?
No, I think this is all just back and forth. I think this is like Liberation Day Part 2, where everyone's just kind of, number one, the markets run really hard. So people are not willing to just overlook things. They're like, hey, you know what? Maybe I should take some profit off the table. Just be smart about it. So I think some of it is just profit taking. And then also some of the comment that Trump is making is kind of, on one hand, it's, hey, we're going to fight a trade war with China. But then within like 24 hours, it's like, yeah, but we'll figure it out.
We'll figure it out. Right.
And it's,
you don't think the soybean thing is that big of a deal?
Not really. I think this is just how Trump negotiates, right? He's a tough negotiator. So he just wants to keep the other side guessing. And he said that so many times, like, I just like to keep the other side guessing. And so I think going into trade negotiations with China and some of the things that Scott Bessent has said, Trade Representative Greer has said, they'll get to their conclusion that they need to. This whole thing, remember, it's a mutually assured destruction. We can't blow up their economy without them blowing up our economy.
Right. And China did actually say today, the quote from the foreign ministry was, decoupling from the U.S. is not realistic or rational.
Yeah.
I mean, that's good to hear, right? It's not like they're trying to say, yeah, we don't need you guys anymore. And it's a full-on isolated war between the two of them. They're like, no, we'll figure it out.
I have a theory, bro. My theory is Barron or President Trump has figured out zero DTE options. Okay. And they're just like, what's going on today? Are my calls underwater? Yo, China, buy our cooking oil or whatever. And boom, the market crashes. Like, woo, I'm in the money again. So.
No, but we're joking about it. But would you put the odds at zero over someone who's connected to someone in the administration that's getting this information ahead of time? I would say the odds are greater than at least 10% on that.
Dude, Eric Trump came out and said they made $1 billion on crypto.
Yeah, he did say that.
I mean, come on. You're telling me that people are not at least somewhat in the know about these things and making some moves in the background. So I don't think it's guiding Trump himself. I just think that some of the people around him could be taking this, using the information to their advantage. I mean, imagine being the guy who knows that Trump is about to put out a tweet that's anti-China.
Yeah.
We need to get into that network.
Well, that's a hard network to get into. But if you know that information and you can do it via crypto, which is totally anonymous, I mean, the guy made $200 million on Friday shorting Bitcoin because of that.
Yeah. Well, it's interesting.
Speaking of crypto, Bitmine, what the hell is going on with this? You got a price target of $90 from B. Riley. Stock's been flat. Ethereum's been kind of dead. I mean, is your bullishness still up there, or how do you think the story plays out?
Hell yeah, dude. Hell yeah. Still bullish on Ethereum. Bullish on stable coins. Bullish on Ethereum. There's just too many institutions that are talking about building on the blockchain, and specifically layer 2 and of Ethereum, and eventually that ecosystem that's being built is going to be worth something. So I'm in the Tom Lee. I hate being in Kathy Wood's camp, but I think she's right, bro. anytime I hear Kathy Wood, I still remember our debate on Roku, so it's really hard to like be like, oh yeah, Kathy Wood knows what she's doing.
You defended Roku. You're like, no, I think she has a point here.
I did, see, and I was a moron for doing it. So what is Roku doing these days anyway? I haven't even checked
It's
on it.
still like number 2 in her fund. Roku year to date is up 30%, so that's helping.
Is it? There you go. So maybe Kathy knows what she's doing.
Okay, so I agree with you on ETH. I'm super bullish as well, but question is about BMNR. Do you still think 100 by end of year is a possibility?
See, that's the thing. I don't know how these guys are getting their price targets. Like, it's just, I mean, I know how I'm getting a price target, but then like the assumptions that some like Tom Lee is making are grounded in, I don't know, pie in the sky numbers. Like, I think it was like, oh, he said he thinks Bitcoin is going to be, I mean, not Bitcoin, Ethereum is going to be between $10,000 and $12,000. And I think the way that he came to that number was the gap between Bitcoin and Ethereum closing. But then my question was, well, then how do you know what the value of Bitcoin is going to be? And then he threw out a target like 250,000 on Bitcoin. And I'm like, okay. So it's not that I don't trust his numbers. I'm sure that there's a methodology at work. I mean, unless he's like publishing his numbers and saying the reason why I think this is going to be worth this is because of X. So the best thing you can do is just hedge your downside while giving yourself a lot of room for upside. You know, and if you can create a strategy around that, you could theoretically make a really good return without putting up too much risk. So.
Okay, so long term, you still believe in ETH. Just ultimately, it's going to be a question of the performance towards the end of the year.
Yeah, I think if we get a Santa Claus rally and the market gets like really happy again, which definitely is the case. I think we have another rally in Q4. I think ETH can get up there. The 75, in my opinion, 75 is definitely possible. Because I'm looking at realistically like a 5,500 on Ethereum, and then you just do the math on it. 6 million Ethereum outstanding, 500. Multiply that out by 5,500, and then you just divide up by the estimate number of shares outstanding at the time, which ends up being close to like 550 to 575, which is the total issuance. You get yourself $75. With an MNAV of 1.3, 1.4. The only thing that I would caution people is understand that the daily volume is pretty sticky right now in terms of like it's around 50 to 70 million, but the number of shares outstanding is getting bigger and bigger.
Yeah.
Right. So in my opinion, it's going to be harder to move it up and harder to move it down. So you're starting to get this like gravity effect. And that's the real question that I have is like, unless Ethereum starts to make massive moves to the upside or massive moves to the downside, the value of BMNR is not going to be moving as nearly as much, or at least that's what I'm thinking. In which case the options market is totally screwed up, in which case you can take advantage of that. So if you know how to take advantage of that, then take it. And if you don't, stay out of the trade.
I agree. All right, so we got 10 minutes left. Let's end it out with some Q&A. Any questions for Kris? We'll do some rapid fire. There is Kris's Twitter right there. Please make sure to subscribe. We did talk about gold for a bit. If you rewind, spend some time talking about gold. But any Q&A on specific stocks, macro concepts, Kris will try to answer it in whichever way.
I think the best thing that I can, not like make a prediction, but the best thing I could say is I think we are headed into a low rate environment next year. Like it's very obvious to me, all the things that are happening. Number one, you've got shelter rolling over. Number two, you've got energy prices. Like if you look at energy price last year, they're like $75 a barrel for oil. Now it's like 55, 56. So ton of movement towards a disinflationary environment. There's also fears around growth slowing down. Then there's technology, which is super deflationary coming in. Jobs market is cooling off. So all the people that are like inflation is going to reaccelerate, just shut up, relax. Like it's not. So,
and that doesn't even take into account AI being deflationary.
Yeah. There's so many things that tell me that, like I said, everyone is looking at like the 1970s and trying to like repeat that and say, oh, look, we had a second bout of inflation because like the first time we didn't control it, blah, blah, blah. And I'm like, yeah, but look at energy prices. The one thing you got to give to Trump is that, dude, he's jawboning the hell out of everyone and just making sure that oil prices stay at a nice, sustainable, low level, so that this way inflation doesn't run rampant. So yes, are there more input costs from goods that are coming in from tariffs? Absolutely. But then on the other hand, you got aggregate demand destruction from all the deportations. So population growth is going down. Energy prices are much lower, so logistics costs are down, right? Credit now is starting to roll over, so that's another thing. So, and then you have all the liquidity that's being pulled off of the consumer from the government, which is no longer doing housing moratoriums and rent moratoriums, and now people are going to have to pay more for their health care because ACA
student loans
are back online. I mean, dude, the consumer right now is getting hit from every single side. You're telling me that, hey, all of a sudden they're going to go out there and spend more money? Like, no, credit's tightening. Sorry, inflation's not the problem that we have to really worry about. And I think there's this video by Stephen Moran, if you want to see something that just came out today. I actually got it queued up. Let me just pull it. Stephen Mirren, not Moran, sorry.
Jay Powell signaled that the Fed is on track for another move. Are you expecting it's 25 basis points? Should it be 50?
Yeah, well, my view is that it should be 50. However, I expect it to be an additional 25. And I think that we're probably set up for 3 25 basis point cuts this year for a total of 75 basis points this year. But I think that, look, it would be really helpful to have the economic data in order to be able to make the decisions we need to make. Certainly, we would want to be inspecting the economy for signs of moves lower in inflation, for signs of changes in the job market. But without those data, we still have to make a decision anyway, and so we'll have to rely upon our forecasts for doing so.
And what did you?
Okay, cool. So we heard him yesterday on CNBC as well. I mean, he is the most bullish out of all the other Fed presidents. The question is just if we'll actually get 3 cuts. Okay, let's do some rapid fire on some stocks. So, Kris, you've talked about VG over and over again. So, just quick thoughts on this. Are you buying the dip, or are you just holding steady on this?
Yeah, long term, great business, generates cash.
Cool.
Yeah.
IREN, are you touching this one?
Not really. I don't really know much about the business, so I couldn't tell you. That's Sam. Sam has been talking about that. I don't know much about it, so.
Okay. Do you still have ASTS, bro?
I do.
You're not taking profits here? I mean,
nope.
Bro, this thing is up. Like,
no. And if you want to know something, I'm going super long on Verizon. See?
Okay, so you're doing both together.
That's right. Telecom, baby. That's where you want to be.
I'm surprised you're not selling your ASTS. You were that convicted that you were choosing to hold on.
It's the easiest business model to understand. It's literally cell towers in space. Like,
all right, there you go.
Cell towers in space, dude. They get fixed fees that are contracted down. I mean, Verizon just had that deal with them. Bell Canada is talking about it. It's a great business model. I don't know.
Amazon, are you a buyer?
I'm gonna let it come down a little bit more, mainly because Amazon's got 2 major headwinds. One, its AWS business is still growing, but it's losing a little bit of steam compared to GCP and Azure, and people are worried about the consumer, which, Amazon, that's a core business. So, people are like, I don't know if I want to be in this too much. So, yeah. But it's trading for a really good value.
Yeah, especially on an EV to EBITDA basis, I would agree. Nebius and CoreWeave, would you touch any of those right here or no?
That's not my forte, man. That's all Sam. Sam is like, there's certain industries that I think other people have done a really good job of covering. And Sam has done the deep dive in all of Nebius's business segments and data centers and all that stuff. So I've kind of just like substituted my own research to him, and just, if he tells me it's good, it's good. If it's not good, it's not good. So, we'll just go based. I would just say caution against listening to me about it. Just ask someone like Sam.
UNH, continue to hold?
Yeah. UNH is good, recession resistant. So if we do get any weakness, they'll do good. They've also got a massive amount of debt on the balance sheet that they can manage, but their debt, if interest rates come down, it's easier to finance it. So yeah, UNH is fine. they've got to deal with some regulatory changes that from the Biden era that they're hopefully going to get their hands around. But one thing you're going to start to see is premiums. If people here haven't already saw some of what the premiums are going to be looking like for not just for United Healthcare, if you have that health insurance, but any health insurance, it's going to be a lot higher next year. So just letting y'all know right now, better save up.
Is Oscar a play on the eventual capitulation of this shutdown, or do you think that one could get wrecked easily if it's not favorable?
No, I think it'll do. I think at this point the ACA subsidy extensions are almost a guarantee. Like it's way too important for the Republicans to have the ACA because there's just so many members that in their local districts that are utilizing the ACA subsidies. Now, this is something that Marjorie Taylor Greene said, which actually made a lot more sense. She's like, look, we can talk about getting rid of these subsidies, but we can't do it cold turkey, right? We can't just say, hey, get used to these subsidies for the last 5 years. And then all of a sudden be like, yeah, you know what? Now you got to stand on your two legs. Like, no, you gotta give people an off ramp. And especially while inflation and it has basically wrecked a lot of people's finances over the last 2-3 years, you got to get people a chance to adjust. So,
are you buying next decade?
Not really. I've already got too much exposure to next decade. So, next decade and Venture Global, I have in spades. So I'm not really going to add to it.
Okay, so you own it, but you're not adding more. Gotcha.
No.
All right, I think that's pretty much it. Or is there any stocks that are on your radar that you would think people should look at? Any broader concepts, or just rates coming down should be a tailwind long term?
I think people need to look at yields. Yields is where I would focus on next year. So number one, the valuation on the S&P is really, really high, which means that there's going to be people who want to kind of like move into a little bit of safety. 2026 is also a midterm year. Those are not usually very, very delightful for the market.
Those are actually horrible years for the market, to be honest.
Yeah.
They're not good years at all.
Yeah. So, you want to be in safety. And so there are companies out there that have really good safety profiles from a cash flow perspective that you want to look at. And then you want to look at the yields that you could get. So on average, the S&P yields between 7 and 9% every year for the last, however many years. The only thing is it also really depends on the entry price. So if you enter at the wrong time when valuations are super high, you're almost guaranteed to underperform the market long term. So it's a good idea right now, in my opinion, if rates are projected to come down, to lock in those yields now, right? So there are dividend companies out there right now that are doing 7% dividends, qualified 7% dividends. That, for someone who's done really, really well this year, you want to take a little bit of money off the top, like put it into some safe industries. That's where you want to look, and that's where I'm looking anyway. So someone said UPS and Verizon dividend monster. So UPS, I am not a big fan of, only because they're unionized at this point. And so anytime they make a little bit more money, the union kind of just says, hey, I want more money. Give me more money. So definitely not a UPS guy, but Verizon's good. Verizon, economy goes down. What do you think? People are going to cancel their cell phone plans? No.
Yeah.
And then there's also this general trend that's happening with a lot of people switching over from cable to fixed wireless broadband access. That's a tailwind for these guys. And then when you look at their credit profiles, they have a lot of debt on the balance sheet, but the debt is manageable because of their strong cash flows. But at the other end of it, if you cut interest rates, the debt servicing becomes cheaper. They just got a new CEO, and there's a whole lot of due diligence that I've done on Verizon. And so I've been building a position in Verizon. I actually took another bigger chunk today as well. So, yeah.
Okay, there we go. Thank you, everybody, for joining. This was our third Macro Thursday with Mr. Kris Patel. I'm putting his Twitter right here in the chat. And we'll be back tomorrow. See what happens.
Later, guys. Have a good one.
Later, Kris. Thank you. Appreciate you. Later.
Later.
All right, folks. That is it for the day. We are done. Tomorrow's Friday. I'll be back tomorrow on the market open. We'll have a daily recap in a couple hours. Talk more about the regional bank stuff on that daily recap, so we'll get into that. Look, in general, I personally don't think Zions and Western Alliance are creating some structural problem with credit in the United States, but that's how the market's reacting. And, if the market's going to react like that, then the market's going to react like that. But there's not much we can do until that is kind of resolved. We do have a quote from Trump on, on beef.
It's such a big category, everything follows. So just about everything follows. And we are working on beef, and I think we have a deal on beef that's going to bring the price of beef. That would be the one product that we would say is a little bit higher than we want it, maybe higher than we want it, and that's going to be coming down pretty soon too. We did something, we worked our magic, but groceries are down, and energy is down, electricity is way down. We have the prices coming down for people. They were abused for 4 years by the Biden administration. Thank you very much, everybody. We'll see you soon. Thank you.
Changes to the IRS.
Okay, beef. Are there beef futures? No, there's cattle futures. Are they green? Are cattle futures green right now? They're up a little bit. Cattle futures are up a little bit. I don't know what deal we got on beef, but Steve is going to like this. Yeah, Steve's going to love it. Steve is going to love it. There you go. Cattle futures up 0.4%. All right. Speaking of Steve, I'll be live on Steve's channel at 9:30. We're going to do something every Thursday. So 9:30 to 10:30, we'll just chop it up about markets, whatever. Steve will probably be on after 10:30, just talking with you guys, but I'll be with him usually on Thursdays, and we'll start the first one of those today. And that's pretty much it. Then we'll be back tomorrow. Dunce, thank you for the super chat right here. Ash, thank you for becoming a channel member. Karen, thank you as well for becoming a channel member. Dunce says, this is the last market open for me. I got a job starting Monday, so I can't be here during the day. Love you, though. Dunce, appreciate you, man. Congrats on the job. The job is way more important than being here watching every day. So hopefully you can catch the daily recap and get caught up on everything. But appreciate you being here. And congrats on the job as well. All right. I think we're done. That is pretty much it. We'll be back again tomorrow morning. Can't believe it's Friday, bro. This was a quick week. This one felt like it felt like it was slow, but it was really quick, particularly because we were up on Monday, recovered from Friday, down on Tuesday, up on Wednesday, down intraday. Then we were up today. Then we went down today with the whole regional bank thing. And so I guess we'll see how we end this out on Friday. Ryan says, bro, just watch at work. Okay, not everyone can just put in their earphones and not do anything at work like some of you guys. I say that because I used to be one of those people that like, not work per se, but one of the clients that I had that I would consult with, like there'd be some hours where I'd be like, dude, I'm checked out. I'm not doing shit right now. Like I'm just, because if you get your work done within like an hour and you're on the docket for 4 hours, I mean, you got 3 hours left. Like, what are you going to do? Like, you're going to do more work? No, you're not getting paid for more work. You're getting paid for the same amount of work that you finished because you were an efficient worker. Philip says, I feel seen. That's what happens, bro. That's what happens. So there you go. All right. I'll be back tomorrow. And I think that's pretty much it. Yeah, I don't think there's anything else. I mean, we'll have the daily recap out, but I think this regional thing was an issue. We'll see if it continues to be an issue, but if it's not, then we should be good to go. We work for our portfolios. Exactly. Let me link Steve's channel for those that don't have it. Deep Dive will be coming out tomorrow. So again, if you want to subscribe to the Substack, I'll put it right there. There's Steve's. Oh, I'll give you his Twitter, but I'll put up his YouTube. And I'll be on with him at 9:30 today. 9:30. And then we'll be done. And then the Substack link, that is right here. All right, that's it for me. Thank you, everybody. Appreciate it. Means the world. Tooth is doing really good. I actually have a checkup with the dentist on October 28th, the day after my birthday. So I'm going to have to leave the market open a little early that day, but it is after the market open, which is a good thing. And yeah, the tooth is going good, and we'll keep going from there. All right. Thank you, everybody. Appreciate it. I'll see you guys tomorrow in the market open. See you later tonight on Steve's show and Daily Recap out in a few hours. Bye, everyone. Have a good one.